afternoon. Thanks for tuning in. You're watching Our Speak You on Bloomberg Quint Live. I'm Navneet Saluja D'Souza.
Hi Navneet, I'm Alex Matthew. Well, we were speaking to the management of TVS just a short while back. Hopefully you got a slice of that conversation. Of course, over the course of the day, we'll bring you a lot of updates from the SIAM conference that's ongoing. In the meanwhile, if you've got questions on equity, then this is the perfect show for you. You can send those queries to us on Twitter, Facebook, YouTube and WhatsApp. You can also call us on 022-4540-4141 or you can mail us on ourspeakyou@bloombergquint.com.
Okay, but before we get to the individual queries on the show, let's tell you what's happening with the markets. We had a positive start owing to global optimism this morning, but Nifty seems to have reversed the gains. Right now, Nifty is trading way below the level of 10,900, which it touched in the morning session. In fact, today is also the day for the weekly options expiry, so you can expect a bit of volatility to come by. In fact, India VIX, which had cooled off in the morning by about 3 to 3.5%, it's now back in the green above the mark of 17 at 17.3. I think it's only about the benchmark indices because the broader markets, they are still maintaining their gains. Both mid-cap as well as the small-cap indices are sitting with some amount of gains, and the market breadth will actually give you a better picture of the entire listed universe. So still in favor of the declines, though that advances, though the gap seems to have bridged little. So watch out for the broader markets if they too also turn in the red. But very quickly pull up the contributors list among the Nifty constituents and check which are the stocks which are dragging the index lower. It is dominated, by the way, by financial. So HDFC dragging the index lower by 23 points. That's a heavy weight with 10% weightage. Also, your private banks, ICICI, HDFC and Kotak Mahindra Bank are all trading with bit of cuts. Some support coming in from Infosys, that's up and about in today's session. And also a couple of your PSUs, ONGC and NTPC have been trading in the positive territory. If you look at the sectoral indices, you've got bounce back coming in from metals because of the positive news from the global markets. Tensions in Hong Kong have eased, and also some bit of positive cues. Maybe US and China may return to the negotiation table come October. That's the news that has come in. So Nifty Metals Index is up about 2.5%. Autos bounce back, pharma is in the green, whereas realty and banking stocks are the one which are not doing well. So Nifty is down about 0.8%. Some analysts mentioning after RBI's mandate to ask the banks to benchmark all floating retail loans from October 1st to external benchmark rates could impact their net interest margins. I don't know if that's the reason why we are seeing some bit of selling coming for those banking stocks. But from the broader markets, Arvind, Kajaria, Ceramics and Coal India are the ones which are seeing some bit of buying interest. We have seen good gains for all of them. And on the losing side, LIC Housing has witnessed a lot of fresh shorting also on the futures side. The stock's down for the third straight day. And something like Magma, FinCorp and REC, Alex, are the ones which are trading in the red.
All right, with that, let's get our two experts in for the day. We've got Ashish Kelkar of Kiran, Jadhav and Associates and Sandeep Jain of Tradeswift Broking, who are here to answer all of your questions. Welcome to the show, gentlemen. I do want to quickly take you through Ashish's picks for you. He's got two. He's got a buy call on Lupin, and he's also, so the target that he's provided here are a couple of targets, 774 and 780. The stop loss on this trade is 756. He's got a buy call on Aurobindo Pharma as well, and he says the target on this trade should be 615 and a stop loss of 603.
Okay, so those are some technical picks coming your way. Let's get going and start addressing some viewer queries. The first one comes in from Abhijit Kamaru. He writes to us on YouTube and he wants a long-term view on Aditya Birla Fashion Retail. That's the stock that he wants a view on. If you could just pull up that counter and check AB Fashion where that's currently trading. 188 also possible if you could just pull up the last 1 year return to get a better sense of this. Sandeep, if you track AB Fashion fundamentally, do you think this is the stock that one should look to keep in their portfolio?
Those who are holding it, they can continue to hold the stock, but somehow, I'm not very bullish on these kind of, stories because, there is so much of competition from the online retail also, and then those international fashion brands might come in very aggressively and might affect the competitive intensity in the industry also. So I feel that, fine, those who are holding it, they can hold because there is so much of correction. But then as far as retail is concerned, somehow Trent looks better to me. Somehow, Trent is a good stock. Then Shoppers Stop has also corrected. But overall, I'm not very bullish on the segment as of now.
Okay, we've got a question from Krishna, who's written us a mail, and he's looking for a fundamental and technical view on Embassy Office Parks REIT. I do not know if a technical view is going to be possible, but I'm still going to ask Ashish, how do you say, not very high volumes, first of all. Stock is at 395 thereabouts. Is there anything that you can tell us from the charts? Ashish, can you hear me? Okay, well, it seems like we have a bit of a technical issue with both our guests for the moment, and we'll get them back onto the program. But of course, we were talking about Embassy Office Park REITs. We'll come back to that in just a short while. But I think the big story overnight is the conversation on retail loans and how much of a pass-through will take place once this gets implemented. Of course, SBI has already put it in place.
In fact, Alex, I think most of the PSU banks I was reading, be it SBI, Punjab National Bank, Union Bank, they were already coming out with newer products which were benched to external benchmark rates. Of course, RBI has given 4 options, one being repo rate, the other being 3-month treasury, 6-month treasury. And in the morning, I think Davina and Neeraj were chatting with the HDFC management as well, though they do not fall under the ambit right now, because the mandate is only for banks and not for NBFCs right now. And I think the reason behind that is also in the budget they said how, the NBFCs will be monitored and will fall under RBI, but the bill is not in place. So maybe when that comes in place, even the NBFCs will fall under that ambit. But it will increase a competition for these NBFCs. So that remains to be seen when these banks go ahead and benchmark to external benchmark rates, whether these NBFCs follow the same or not. I don't know if that's the reason why LIC Housing and HDFC, both these stocks are trading in the red.
And that's very interesting and very, very important point, because if you talk about SBI's home loan rate, which they tout is among the cheapest in the market at 8.05%, the new ones at least. If you talk about the higher cost of funds for some of these NBFCs, not necessarily the HDFCs of the world, but it would definitely squeeze margins if you were to think about it. We were talking about Embassy Office Parks REIT, and the question was on the technicals. Ashish, I'm not sure whether you have enough to go by, but is there anything that you can tell us from the charts?
I'm so sorry, Alex, because I won't be able to give because the data is too small. So there are no indicators which would give the right direction. So sincere apology for the same.
No problem. Sandeep, if we're talking about the fundamentals of this, and we're talking about Embassy Office Park REITs, REITs were being pegged as a very interesting option investment-wise. Would you suggest getting in based on how you see it going?
Yeah, I think he should stay invested in the stock. In fact, it's a different kind of story altogether. It's a real estate investment trust, and somehow there are 2 types of income one can make. And in fact, there is a regular fixed income also. Those who are not willing to invest in, say, real estate directly. So it's a good way of investing in a mutual fund of real estate, to put it in a very crude and a layman language. So it's a kind of mutual fund of real estate properties, and that too also in a city like Bangalore, and the office properties where the rentals are very good. So somehow this particular listing has actually given a very good return in such a lackluster market, and where the returns are actually negative in all the asset classes other than gold and currency. So particularly, and real estate stocks for that matter are not doing well. But then Bangalore based stocks, particularly Embassy REIT, then Prestige might be coming up with such a thing, and then Brigade Enterprises. So these 2-3 stories in real estate have actually done well. So Embassy REIT is a fantastic story. One should stay invested for a regular stream of income also.
Okay, that's Brigade for you. It's fallen, I guess, in the last 3 months. It's down 22%. All right. The next query is on Lupin. Prajakta Bhatt writes to us, and Prajakta has bought Lupin, by the way, at 1300 levels, and she wants to know if she should look to hold or exit this. So 1300, and currently the stock's at 767. What she's also asking if the option is to exit, if there is any alternate investment that our experts can advise. So Sandeep, I'm going to come back to you. Is it worth keeping Lupin in the portfolio? It's already fallen from 1300 levels of our viewer where she entered the stock at, and if not, if she's looking to now sell at current levels, where will you ask her to deploy her money?
I think Lupin has already been recommended by Ashish, and technically it must be looking good. And somehow, fundamentally, I don't really appreciate the company, the kind of fundamental changes the company has been seeing, and the kind of correction, as you rightly, told. So I feel that, in pharma space, somehow I really like Aurobindo in the large caps. Then in the mid caps, I have been recommending Ipca Labs since couple of times. And then in the smaller stories, Suven Life looks good to me.
Okay, Ashish, I'm coming to you on HDFC AMC and HDFC Life. We've got Shalom Ranga, who's bought HDFC AMC at levels of 1891 and HDFC Life at levels of 471. In both of those counters, he's making a healthy profit. He's looking to hold for another year or so, and he's looking for a target. Is it possible to give him one?
Definitely. Alex, I'll talk about HDFC AMC first, because the chart structure is very good. It is consistently making higher tops and higher bottoms. And yes, definitely, if his investors' horizon is for next 1 year, then definitely the stock can go to around 3100 to 3150. So there can be a correction in between, because in the last around 6 to 7 trading session, the stock has rallied from a level of around 2000 to a level of around 2600, and only a one red candle in between. So there is a probability that it may correct a bit, but that correction will be a healthy correction to go up further. So definitely hold for the target of 3150 for HDFC AMC. For HDFC Life, this particular stock, same chart structure, higher top and higher bottom, definitely hold for the next 1 year. My first target on this chart would be 610. Currently it is trading at 535. So definitely hold with a strict stop loss of 505 on closing basis.
Okay, HDFC Life, well, the stock has been trading around its all-time high levels. This year itself, it's up about 38%. And a very interesting query coming in from Voice of the Lamp. And so far, we used to get a query between HDFC Twins versus Bajaj Twins. But he's asking with respect to smaller HDFC Twins. Now, AMC and Life, which are already trading at their lifetime highs, bucking the market trend at least, they've given good returns to their shareholders. Sandeep, what he wants to know, between these smaller HDFC Twins, that's AMC and Life, and versus Bajaj Twins, which are the best picks now for the next 10 years, which can turn out to be ultra wealth creators in the next decade?
I would go with HDFC Twins. In fact, HDFC AMC somehow has actually gone up very fast in last few months, and in fact somehow the valuations are also very expensive as on date. But then from 8 to 10 years perspective, somehow one can really buy the stock on declines. So one has to wait for some declines in HDFC AMC, and even HDFC Life has also gone up. In fact, the whole HDFC group has actually outperformed the markets, and I feel that both the businesses are very promising, and both businesses will do very well in the long run also. So I think, one should go with them rather than Bajaj Finance. Bajaj Finserv certainly are doing well, but then I have more conviction with the HDFC group, and particularly both the companies should be bought on declines, and they should be invested through SIP mode. That's my strategy of investing in these kind of high conviction stocks.
Okay, Ashish, coming back to you on Hindustan Zinc, we've got Shashank, who's bought at levels of 234. I would think that he's bought on the way down, because the stock is down from, levels of a little over 300, I think, a year back. It's about 0.6% higher and trade today at 216, so not too far away from his buy price. What should he do based on the technicals?
Based on technicals, Alex, I would recommend him to hold on, because it is trying to change the trend. The trend reversal pattern is in the making. We don't have a breakout as of now, but the way there are volumes which are coming in, and the shadow indicators that I follow, they are a little bit showing me the positive direction in the particular stock price. So definitely I would recommend him to hold on. His stock price is around 234.35. That can be achieved within the next 15 to 16 trading sessions. And if this important level of 240, if that 240 level is crossed, then the next target which I can see is 258. So definitely hold with a strict stop loss of 209 on closing basis.
Okay, that's Hindustan Zinc for you. The next query is on the holding companies. And Mansurov seems to be a big fan of these holding companies. He has a standard question now. He wants to know which is the best holding company to invest for the next 8 to 10 years. Okay, some time horizon has been changed there. So Sandeep, any holding company that you like at current levels that you would advise someone to buy for the next 8 or 10 years?
See, somehow there are a couple of stocks, and in fact, they really look cheap also when you look at all these companies. But then these holding companies are holding those stocks which are not doing well because the markets are not doing well. So I feel that, when the market starts doing well and after all these stocks actually perform, then the chance of holding companies doing well comes. So I feel that, it is a long time to go now. So for a fresh investment, I won't recommend him to invest as of now, and he should wait. But then somehow I really like Maharashtra scooters, which actually hit 52-week highs in last few months. And because as we talked about the Bajaj twins, so Maharashtra scooters is a kind of holding company for Bajaj twins. So they have a couple of stake in these particular companies. So I think Maharashtra scooters can be a good buy. And then BBTC, Bombay Burma Trading Company, that can be a good buy again. So one has to wait for some time to invest in these.
Okay, I'm sure that Mayank knows all about Mahindra. What is it? Maharashtra scooters.
Maharashtra
yes.
scooters.
Maharashtra scooters. Yes, exactly. Satya Subhash has got a question on Action Construction Equipment. He bought at levels of 90 and he's holding for, or he plans to hold for a year. He wants to know whether he can add more. The current price, which is 59. Ashish, on the charts, do you suggest adding more at this point?
Not really, because the overall chart structure is very weak. As of now, from after the fall from a level of around 115, the price has come down to around 55, and now it is consolidating. This consolidation span, the band is from 50 to around 62 odd levels. So till the time the stock is in this band, then I would not recommend to enter or to buy more, because after the consolidation, if we get a breakout on the lower side, this will be a down flag formation which can take the price to around 40 odd levels. So as of now, I will not recommend to add more. Instead, I will recommend to have a hold as of now with a strict stop loss of 49, 10 rupees here, but still that will be a better, because his investment horizon is 1 year. So 49 will be the better stop loss, and if he wants to average out, then he should average out only above 62, because after this level, there will be a sharp rally in this particular counter.
Okay, that's Action Construction for you. Let's move on to our next query, and this one's from Shell, who writes to us on YouTube. He's holding GIC Re, which he's bought at 170, and he's holding around 200 shares of the same. His time horizon is next 5 years. So he's at the money right now. Sandeep, would you advise him to stay invested into GIC Re for the next 5 years? Also considering we are in a volatile environment and he's not losing any money, would you advise him to stay invested in this or shift his investment to something else?
He can stay invested in this because it has actually corrected. It has given a huge correction. So I think at these levels, it will not be wise to actually exit the stock. And then there is a good dividend yield also in the stock. Then the pedigree, somehow PSU stocks are not doing well in the markets, but then the segment is really good. And in fact, it's the only reinsurer listed on the bourses. So that's the different thing which is about the company. So I feel it should stay invested.
Very quickly, Ashish, if you can give us a technical view on SHK Liquor. We've got Jason Sohns who's asking a question. Stock is currently trading at 128.65, not very high volumes though.
Hold as of now with a strict stop loss of 124 on a closing basis. If the price goes above 130, the first target would be 136.
Okay, that's SHK Liquor, and it's that time of the show when we hit our rapid fire segment. Before we begin, just a request to both our experts, Ashish and Sandeep, please keep your answers short so that we can accommodate a lot more queries from our viewers. Puneet wants a long-term view on RBL Bank. Sandeep, this one's for you. If somebody wants to buy for the next 3 to 5 years, is it thumbs up or thumbs down?
Thumbs down.
Okay, Frankie Johnson wants to know the best pick from the sugar industry for the long term, and he's looking at a company that has an advantage with respect to ethanol. Sandeep, this is for you.
Balrampur or Praj Industries?
Okay, Ashish, on the charts, how is Asian Paints looking? I think there was a bit of correction seen yesterday.
Asian Paint, yes, it will continue to correct further. The next target which I can see on the chart is 1480, but it is a good correction. Hold with a strict stop loss of 1475. There will be a pullback, and the target on the higher side will be 1575.
Sandeep, Raviraj has bought into two counters that have gotten beaten down significantly. One is Ashok Leyland, which he bought at levels of 109, and Yes Bank, he bought at levels of 94. He's asking whether these two stocks have bottomed out and whether he should average.
I think he shouldn't think of averaging as of now, because he has to look at the broader markets also before devising any averaging strategies in any particular stock. So Ashok Leyland is a good bet. In fact, he should certainly think of averaging it. But then the markets have to actually start doing well. So Ashok Leyland is yes. Yes Bank, for Yes Bank, it's no.
Okay, the next one is an ICICI Bank. Ankur Banod's bought at 392, and okay, he wants a fundamental view here. Sandeep, would you advise him to stay invested? It's just at the money right now.
Can you repeat the stock?
ICICI Bank bought at almost current levels.
SBI. Yeah, I think he should stay invested.
ICICI Bank, Sandeep. ICICI Bank.
Okay, today there is a negative news about the whole sector because of those external benchmarking thing, and these companies were actually encashing on this particular loophole. So I think in the long run, ICICI Bank will certainly do well, so he should stay invested.
Very quickly, HDFC at 2100. Ashish, would you say hold on?
Definitely hold on with a strict stop loss of 2000 on the closing basis. The upper target would be 2170.
Okay, hold on to HDFC is a call. On that note, thank you so much to both our guests, Ashish and Sandeep, for helping our viewers with all the queries that you did answer. That's all we have for you on this edition of Ask PQ. Do remember, we're just a tweet, post, or call away. Up next is Power Lunch, and this is Bloomberg Quint.